Guys, happy Friday. TGIF, I got my Italian sparkling Central Market Italian sparkling mineral water and I just ruined any health benefits by adding caffeine and sugar to it. So not like there's health benefits to this, but I just basically turned it into a Coke. I'm hoping it's fractionally better for you than a Coke, maybe marginally. On the margins, it might be a little better for you than a Coke. All right. Hope everyone had a good week. I'm trying to get this done before the sun hits. I'm in the shade right now. Let's look at the market. I didn't really like that sell-off at the end of the day. That market was going the right direction the first couple of hours, but it's just like it's just as if everyone, no one wanted to see all-time highs this week, I guess. But same story with the NASDAQ. This was a bullish gap, but didn't even make it through the day. So that really is actually a bearish sign, a gap that doesn't even make it. That's not good. I would have rather seen it close up here, at least in the top half of the range for the day. But oh well, what are you going to do? Here's Bitcoin futures. Maybe they had, yeah, sure enough. Okay, so what happened? Somebody can tell me in the comments. At least I'll remember to share my screen today. This is like the fourth live stream in a row that I've remembered to share my screen without somebody having to call me or tell me. Gosh darn it. So what time did Bitcoin start selling off? That's what killed the market. I was busy this afternoon. So it started selling off at noon. Wow. Okay. I bet that killed all micro strategies. Not too bad. Okay, well, let's look at some other stuff. Let's look at the Altiverse, maybe. Let's look at some verses. So here is the Altiverse, the famous Altiverse. Alti itself down a little bit, about a third as much as the index. Man, I hated to see this. This thing was up at lunch. Everything looked great. Elf Beauty. Pulling back. All right, how about LFGY? Darn it. I mean, if it wasn't for CIFR, this wouldn't even be up. What the heck was that? That was some kind of something. Some kind of something. Thanks, Max. Sounded like maybe some kind of World War II plane. The other day I was out here and some World War II airplane flew over. But I think they have a historic Air Force. They used to call it a Confederate Air Force, but that's no longer cool. So they call it, or that's what they say. I'm not saying that. So they call it something else. They call it something. Anyway. But they have one of those, I think, in San Antonio. And sometimes I'll see planes from World War II fly over. All right. Well, let's go over here GPTY and see if this looks any better. Now, GPTY isn't really down that much. There's a problem with Google. But the rest of everything else is accurate. So GPTY, out of the bunch of them, is the best acting as far as the underlying goes. Because GPTY's underlines are actually up on average. Now, GPTY, hopefully Google will get the problem fixed where the prices don't update automatically. GPTY itself was down 0.5%, but is up 2 hours post, is up 2% post market. But anyway, that's probably nothing. So down 0.5% on the day. I mean, that's not, it's the strongest one of the three. So this should say down 0.5%. But the average stock was up a tenth. Anyway, all right, GTPY, nice job. I'm going to look at as soon as they publish the positions tonight. I'm going to update them, and I'm going to have some new content this weekend on the GPTY hedge. I'm obsessed with that, as you guys know. We can look at it right now, see how it did. It probably did better towards the end of the day, but GTPY hedge, and now it's down 15,000 right now. That's what the profit and loss graph looks like on the GPTY hedge. You know, if the market has a steep sell-off, this thing could make $500,000. If it does like it did in August, this trade would be worth probably $500,000, this position. All right, well, I did some content late in the day, and I showed you guys how to do that hedge, that same hedge, in a retail account. But the GPTY hedge is for a quarter. It goes all the way out to March. This one's just till next week. But anyway, I did the same one for next week, and just in case there's a tweet or something comes, if the market sells off over the weekend again, this one will make huge money. But anyway, this one expires Friday. So anyway, all right. Not huge money, but it'll make a nice percentage return. All right, well, let's look at the index buffer report. All right. What is ugly, right? Z-vol, I guess, because volatility must have got hit right at the end of the day, too. Gosh darn it. That is not good news. I said, every time I don't pay attention to the market, I was working on some new videos that I'm going to try to put out tonight. And sure enough, the market starts selling off. Let's look at volatility. All right. Well, yeah, it's so the same time it went up at 12 o'clock. Well, so I'm going to look over in the comments. Somebody's probably already put in the comments what it was. Let's look at volatility and see if it was going up. It wasn't going up in advance. It caught everyone by surprise. Sometimes VIX is going up in advance or something, but not today. Whatever it was, just caught people off sides. Let's look at volatility futures. Those are even trading right now. They'll trade till 4 o'clock. And they started blowing up about noon also. All right, well, now I wonder what it is. I'm going to look over here and see what you guys are saying. White House pressers. Okay, yeah. Lots of times they try to do that. Lots of times they will hold a big announcement until after the market closes. Like if a war's going to break out, you always hear about it. I mean, the first announcements of, they've sent B-2s into Baghdad or whatever. You always hear that on a Friday night about 5 o'clock or 7 o'clock. They try to miss all the news cycles. Anyway, all right. And Canada's gonna counter tariff us. It's just all posturing. All that is not good news. Yeah, buying oil. Okay. Well, that's what I get for working on it. I'm trying to work on some new content for you guys. What I'm doing is pretty interesting. I'm comparing, I did a video today where I compared YieldMax and Curve and JP Morgan, and I liked that video, and I made an apples to apples comparison. Well, I'm going to do the same thing with Roundhill, and I'm doing that, and that's what I've been working on. So, and it's pretty interesting, Roundhill, and I think you guys will like it. But in any event, I did make some content, and whenever I put trades together, well, last week and this week, anything that I've given to you guys, I've been trying to do is in pairs. So there's always some good news. So anyway, but this top line is the good news, because this thing, it's just a one lot contract, but heck, it made 20%, a real trader is probably doing this with 10 or 20 lots, but, or it depends on how big your account is, what you're trying to hedge. But this is for the smallest account I could imagine, like a $10,000 Tasty Trade account. Anyway, it's interesting. We'll keep an eye on it. All right, let's get back here to the buffer report. So there's just not a lot of good to say. I mean, Fiat and 5E were now down the most. At lunch, they were up the most. I mean, not compared to SVOL, but pretty much. We had one that was up, and it's got to be a bad print or something. There's probably something wrong with Google. I'll hit refresh. There's no way WDT's up. Heck, let's check. All right, WDTE is unchanged post-market. It's not showing what it did today, though. I don't know. Anyway, there's no way it's. I mean, I guess we can look at the chart. It was down from yesterday's close, but it was up from today's open. I think it counts from yesterday's close. So just like I said, it wasn't down. It looks like it was down. I mean, it wasn't up. It looks like it was down partly. That's fine. That is fine. All right. Well, let's look at something more interesting. This isn't very interesting, is it? USOY. Yeah, I mean, oil. So I wonder if gold, I mean, I know GDXY isn't really gold. It's gold miners. But, I mean, I wonder if that would be a good place to be as well. I mean, of course it is for inflationary purposes. But I wonder for, like, zombie apocalypse purposes. I wonder how much hedge purposes it has. The old days, used to be what people would buy whenever something went wrong. Gold or United States bonds. Those are usually good too. All right. Let's see. Let's look at the yield max. God, this is ugly at the end of the day. It killed all the high flying stocks, DeFi, and gosh darn it, AMD, anything crypto or crypto related. But still, though, the good news is the good news is, though, look back at this. Yeah, I mean, that wasn't good news, but the same thing happened for 4 years. I mean, if you read the book, The Art of the Deal, it's just that's the strategy. You say something ridiculous to provoke a reaction, or you're not ridiculous, but that's just kind of the way it goes. So I'm sure they'll be able to get something worked out with Canada. I'm more concerned about if the press release was that, that Russia's invading Poland or something. That's my nightmare. I mean, I'm not, or something like that. That's more what I was thinking. This is just this will hopefully see this right here, this whole sell-off right here. It was nothing. It was a tweet and it was posturing, or it didn't turn out to be anything, or especially not for me, because I never go out further than a week, or I rarely do. But for people trading Friday options, it turned out to be nothing. You wanted to fade that move. Now, who knows? Maybe he's just getting an early start on the weekend. We'll see. Maybe more bad news comes out over the weekend and we go down. You never know. But and then I wouldn't be surprised to go right back up next week. Wouldn't be at all surprised. We did it for 4 years. Anyway, all right. Well, the yield max was too ugly to look at. I'm trying to think of something I wanted to, something good I have to show you guys. Anything? I mean, I don't really have. I'm trying to think. I mean, I can look at SB's trade, and look, SB and I have been going back on how's the best way to address Planeteer, and his way's up a little bit more than mine still. All I did was I made a slightly safer version of his trade anyway, where I'm just following those. But then in case you didn't see my content today, it was real quick. I showed this trade. Very simple trade, selling 2 put spreads to buy 1 call spread. It's a risk reversal. It's a nice trade. Get a credit, 68% chance of profit, and you get a buffered expiration of 7.7%. So that's not bad. That's one way. If you're bullish on Planeteer, you could do that. If you're uber bullish, just take this. See this call out here? You're selling for 53 cents. Just if you don't need $53, just remove that. If you're really a bull, do something like that. And that's fine too. And then if you do that, you can move this in a little bit. But anyway, something like that works too. If you're super bullish. Here, we'll save that one. We'll see which one comes out best. But this one's a credit and a chance of profit in a pretty huge buffer. Look at this. What's this buffer size? 6.5 or something. Not bad. All right, so I'm going to save this trade is uber bullish. Uber bullish loaded dice. Save as new trade. All right. But then then just real quick, there's a variation on that same trade. Look at this. This is the same. This is the same trade as the first trade. All it is, this option was out here. We're selling that option. We don't have to. We could move it in and sell it, and then we change the risk around. And so what this actually is this is an iron condor with no risk to the bullish side, and it has a huge buffer, like an 8.2% buffer at expiration. So this is a way to play Planeteer, and they have earnings next week. It's a way. I mean, but anyway, then there's the third way. There's a way for everybody. Then there's the neutral but bearish. You could do the reverse of that trade. And this is a great trade too. If it's not even necessarily bearish, you're just saying, hey, I don't think Planeteer is going to go up more than 11% by expiration. I'm betting against it going above 90. You could think of this as selling a covered call on a stock you don't own. If it goes above 90, that's just like your call going in the money. No, shit, you're going to lose $731. Okay, well, that's your risk. I mean, if it goes to 100, you'll lose 731. If it goes to 95, you'll lose 342. If it goes to 90, well, you get the idea. If it has a big miss and goes down, you'll still make a little bit of money. You'll have a consolation prize. $269 credit, max loss $731. An 8 or 10 or 11% buffer. Just visually, I don't like how much red there is compared to green. The bullish version of the same trade visually had better risk reward visually, and that's because of call skew, I believe. But anyway, there's three ways to do it. So you guys figure out which way Planeteer's going. In any of those trades, you can afford to take your wife to dinner. You should be able to anyway. But you'll have a credit, or you could pay a bill with that. That'd be awesome. $269. Or whatever. Take yourself to go buy something for yourself. All right, I'm going to look at questions now, but I wanted to talk about options for a second. I'll see what you guys are up to. But then I also had some other stuff to talk about it. If you guys want to, we'll see what you guys have to say. Being a Friday, I'm sure you guys are talkative. All right, so it's all that's not good news. Buying oil. Okay, I know what I wanted to do. Oh, you went to a fire aid benefit concert? Cool. Well, it's not. I mean, it's a good cause. I mean, but that's devastating. How many people lost their homes out there? Just decimated entire neighborhoods. I was watching that again today. Well, yeah, that's bad. I was really worried last week because the winds had picked up again and some fires started. But all right, let's look. I wanted to look at this. Let's look at GDXY. Yeah, I mean okay, well, GDXY has been going up lately, but I mean, that's just lately. Let's get out a daily chart. Pretty much sideways since inception. Yeah. Let's check out USOI. These are the inflation hedge covered call funds. Okay, well, that's up since inception, up this year. That's good. Let's check. How about TLTW? I know it's not one of the companies we usually talk about or whatever, but it's on TLT, which is an important hedging instrument. It has important correlation or anti-correlation characteristics, but this one has been dead money for a long time. Since September of 2023, it's gone nowhere. And this includes the dividends. This is dividends included. So, I mean, you're even, but only because of the dividends. I mean, you know, so that tells you right there. Well, what's some other good hedging ones? What about USOI? Do any of you guys have that one? Now, that one has a longer history than USOI. Now, that one had a little problem back there when oil went to zero. Can you imagine owning it that day at 74? And then it goes to, this is why you diversify. I mean, but anyway, because this would hurt even if you're diversified. But, you know, if you have 5 high yield funds instead of 1 high yield fund, I mean, but my gosh, it went from 74 to 58 and then bounced a little bit, gave you some signs of hope, and then dropped to 32. I think they did massive reverse splits, if I remember, 10 for 1 or something. But then since then, it's been golden. There's also one, I mean, GLDI is one. Covered call. Look at that one. Now, that's the one. That's the one I want. I'm long this one. Hey, guys. Buy GDLI. Buy. Hey, guys, I got this one last year. I forgot to tell you guys. Yeah. I'm loaded up on this one, guys. Lots of shares. You want to buy my e-guide? My e-guides are $9.99. I'll tell you guys exactly how I did it. Swear to God. Anyway, no, that's impressive. Okay, well, yes. I want to make my portfolio less correlated to the Qs. Right now, my portfolio is 1,000% correlated to the Qs, which is good when the Qs is going up. But you know, that's not gonna last forever. Well, anyway, those are some diversifying ideas. You could also do, I mean, also that cash is the ultimate diversifier. You could take some out of growth and just put it in some real stable bond funds that do covered calls and just make a little enhanced return, they call it. So you get whatever bonds get plus a little bit and sit it out. You know, I mean, Mark Cuban's in cash. I mean, he's real conservative, and lots of times those rich guys are wrong. Just because they're rich doesn't mean they're right. But yeah, but I heard Cuban's in cash, and Warren Buffett has all-time high levels of cash, I've heard. So, you know, we'll see. I was sure hoping the market was going to melt up today into the quarter. Lots of times you get into the quarter melt up. Maybe it's not as strong as I think it is. It may not be as strong as I think it is. All right, so check this out. So check this back test out. Here's a portfolio that's 80-20 SPY and YMAX. And this goes back, this just goes to April. So this is just like 9 months. But it's because I'm trying to test Round Hill. And Round Hill only goes back till April. Okay, well, anyway, YMAX and SPY together made 12%. Not bad. SPY and XDTE together made 13%. Even better. And they did it with a little bit less drawdown and a lower standard deviation. It was definitely better performing, better metrics. The last one was SPY and JEPI. All right. Well, this one made 11%. Okay. The deal is, though, if you look, this is the return of there's 3 portfolios, and the last one is the benchmark, which is just the SPY. They're all about the same. The big difference is portfolio income. A benchmark doesn't get an income. It's just a benchmark, so they don't even put it here. But so here's the big difference here. The fund with WiMAX in it makes 80,000. The fund with, it says curve, but it's mismarked. I mean, it's marked from the last one. But it only makes 50,000, and the JP Morgan one is marked correctly. It makes 21,000. So what I did in that first video, if you guys watched it, is I normalized the funds. In other words, I cut the allocation to high yield in this one or boosted it in this one. Then once you do that, then you can look apples to apples and you can see who really performs better. Right now, if you're just going on 80-20, and this, which isn't really apples to apples, but if you're going at 80-20, XDT is the champion. And I suspect even after I normalize for, I suspect even after I normalize for the dividend or the income, that I'm thinking XDT will probably still win. But that kind of surprises me that YieldMax's income was that much higher. XDT pays a pretty high income, but so what that's going to mean when I adjust the portfolios, and that's what I like about doing this, when I'm going to have to edit this, and I'm going to edit the well, anyway, I'll have to change the allocations, but when I do that, it's going to make the level of SPY go up or down depending on which fund it is. So so then we'll see. Then we can really see how how WiMAX really competes with XDTE. But right here, it's. I mean, I don't know. We'll see. We'll see. I'm going to finish that video. All right. I'm trying to see here if I have more comments. It seems like the comments are stuck. I don't know. Maybe that's all the comments. I appreciate you guys being here. Yeah, I heard there's a White House press. Yeah. Tariffs were going in place at 3 p.m. Oh, gosh. Yeah, not good news. All right, guys. Well, I appreciate y'all for being here. And you have a good day. And be looking for that video on the XDTE versus WiMAX test. It'll be out soon. All right, guys. See ya.